Okay, recording this video Thursday, 6th of February 2014, and time to do another rule of thumb video. These rule of thumb videos seem to be going over very well, so thank you for all the feedback, the positive feedback I'm getting from them. This video is going to be talking about the importance of the 11 a.m. window for reversals. And first of all, clarification. Got an email the other day. Someone was asking me, when I say 11 a.m., do I mean New York time, Chicago time? Is it, East Coast, Central time zone? There is a convention you should be using when you're talking about timestamps, the time zone of the exchange of the instrument that you are trading. So we're trading Emini futures. They're out of the CME, Chicago Mercantile Exchange, and that is in Chicago, obviously, with the central time zone. So when I talk about the importance of the 11 a.m. window, I mean 11 a.m. Chicago time. So that's just a clarification on time zones. So broadly speaking, we've got three kind of days. We've got trending days, we've got reversal days, and we've got do nothing days. Trending days either go up or go down all day. Reversal days, reverse. They're in one direction in the morning and another direction in the afternoon. And then do nothing days are kind of just low range days, basically no kind of obvious trend direction and relatively small range. Small range on the E-mini is somewhere between 7 and 8 points. Luckily these days, we've got quite a lot of activity, and the ranging days, the low ranging do nothing type days are less than 1 day a week, so less than 20% of the time. So most of the time you're trying to figure out are we what the trend direction is and whether we're going to have a reversal during that day. If we're not going to have a reversal during that day, it's a question of just jumping on board the trend direction, identifying the trend direction and finding a good pullback to kind of get on board where we have kind of professional activity, buying a dip and jumping on board. Reversal days are the tricky ones. Reversal days are the days where we have a change in trend. We need to know what the trend direction was and what it's moving to and find a good entry point for the reversal of that trend. And for me, a really important rule is the 11 a.m. window. And the rule goes like this. If the market has not reversed by 11 a.m. in the morning Chicago time, it is unlikely to reverse, and that trend direction in the opposite direction is likely to be extremely weak, and we're just going to bobble around or stay in the overall direction of the trend that we had in the morning. Today's trading activity is potentially a perfect example of that. I'm recording this at it's now 12:21 p.m. Chicago time. We've gone past the 11 a.m. window, and in my thinking we have not reversed trend, although we had a very nice signal for a potential reversal of trend. And so because we have not reversed trend, we're just going to bobble around and kind of do nothing to the end of the day. First of all, let me just show you the higher time frame chart, the way this kind of day is set up. So we've had this really big sell-off. Monday was the huge big down day, biggest down day in 9 months or something like that, and we had a little bit of consolidation after that, a couple of 2 days of consolidation. But on the 40,500 tip bar chart with yesterday's activity, Wednesday's activity, we put in pullback to end of trend, and we have a nice little pattern here. We have exhaustion selling on a left shoulder. We got bullish divergence. This came in very close to the zero line, so we're waiting for something a little bit deeper. We've got this little second bullish divergence come in that was deeper than this first one, and now we put in a price confirmation as well. So we got pullback to end of trend, went off yesterday. So that was the beginnings. That was why we've set off to the upside today, and we've had a nice kind of break into an uptrend. Beginning of the day started off really strong on the 1500 sit bar chart. We broke immediately into an uptrend and just raced away to these new highs up in the 60s. So looks nice for a potential reversal trade because we have exhaustion on a left shoulder. This exhaustion pattern is getting the move going, and then this one is kind of dumping out, kind of taking profits. We go to make a final flushing out the last of the buyers here. All these blue professional bars, up bars, kind of on these highs, professionals taking profits up those highs. Then we have a nice little pullback to end of trend, very weak buying kind of going on, and the question is, are we going to have a reversal today? Are we going to break into a relatively strong kind of downtrend? And my answer would be no, because we've gone past 11 a.m. 11 a.m. Was around here, and we've not had a really strong move to the downside to signal that there's real weakness. People are taking profits and dumping out of this. Got a little bit of weakness at the moment, but I would suggest by the end of the day, what we'll have here is we'll kind of be caught in a little bit of a congestion zone somewhere between, where these Rambo patterns kind of came in earlier in the day. We'll bounce up from here, make weak higher highs, just break by quarter point, half point, nothing kind of major to the upside, but we will not have a real kind of strong move to the downside where people dump this uptrend and kind of short it, and there's good money, a nice 4+ point move to be made to the downside. It would be dangerous to take a short trade because these short trades are not going to go very far because we've not got a real reversal day. If this whole activity had happened well before the 11 a.m. window, so let me just mark the 11 a.m. point here. If this move had happened nicely before 11 a.m. earlier on in the day, and we'd had some serious weakness by 11 a.m., then I would count that as a potential reversal day, and it would be worth playing, the short side after this. Now, so I'm recording this. It's now 12:24 p.m. Chicago time. We're breaking back down to 61s. It's going to be a fairly big reading here, negative 9,000. So it could be an exhaustion type pattern come in on certainly the 500 tip bar chart, maybe the 1500. But from here, I would expect it to kind of bounce back because it's not a kind of classic reversal day. Now, does this work all of the time? No, of course, nothing works all of the time. 3 out of 5, 4 out of 5 kind of days it does work. But let's see. I'll record another video at the end of the day, but the best trading opportunities will be trying to catch some of these moves to the downside, support kind of coming in, blue professional bars picking up the lows, maybe a little bit of an end of trend move on the 500 tip bar chart would be kind of a good place to get in. And I don't think this is going to be a reversal day. You can see we're just bouncing back up to the 62s, so at that reading at 10,000 here, a little bit of a sell-off on 1500, that might be a good kind of entry point to get in for just a couple of points to the upside. You don't want to be greedy on days like this where we're just going to spend, consolidate at the highs, I would have thought. So anyway, that's the rule. If the market has not turned by 11 a.m. Chicago time, if the E-mini is not turned by that time, and you get kind of proper weakness and are really starting off on a confirmed kind of downtrend, then the market is unlikely to have a strong reversal move, and it's just going to consolidate in a little bit of a range, maybe test the highs again, or the lows if we're in a downtrend breaking into an uptrend. The rule works either ways. This happens to be an uptrending day with kind of missing the reversal window into a downtrend. It works exactly the same on the way down. We kind of sell-offs and reversing by 11 a.m. But there we go. That's the 11 a.m. rule. So I'll record a video after 3 o'clock and we'll see what happens at the end of the day for the E-mini. Okay, there we go. 3 hours later, it is now 3:15 p.m. Chicago time. Market has closed, and this little red dotted vertical line shows you where I was recording that last piece of video clip. This is the 11 a.m. window, and actually was the low for a nice little rally kind of into the close and then a little bit of profit taking. So a potential setup for a reversal trade after we'd had this exhaustion pattern here on the 1500 tip bar chart, pullback to end of trend, and after blue professional spike bar here, but no, we couldn't reverse by the time 11 a.m. window closed. And so what we've done is just kind of bobble around at the highs, breaking a little bit to new highs by a little bit each time. And there we go, no decent kind of trade to the downside. What is interesting now is that this is played out on the 4,500 tip bar chart to a nice pullback to end of trend sequence there. So that last kind of little gallop up into almost 70 was formed by that support on the 4,500 tip bar chart into that end of trend. And you can see all the blue professional bars at the end of the day. Not sure what we'll do tomorrow. Certainly been kind of a strong uptrending day, but there was no reason to be trading to the short side because the trend had not reversed and we did not get a kind of a classic reversal day because the window shut after 11 a.m. So there we go, little rule of thumb. Hopefully that's helpful to you.